So the two callouts last night were X and Chewy. Chewy was not a pattern play, but I'm not talking about just pattern trading. I want to talk about it all. Okay, so here on Chewy, it was not pattern related. The fact that we were calling this out, David had found it, and we all kind of went over it in our own little private call the other day. And just going through the TA routine, marking your emerging candles, marking all that good stuff, you get the best lines pretty quick. So you can kind of just leave them there forever and then, trade within them, navigate. So as you can see, we're getting lowering sellers. So no, I don't care about trying to take this any farther. We've gotten our good play out of this. I don't care to see this go any further. So I'm not going to be greedy. We're not going to hold any of that. But the big important part about swing trading is forming a plan, because genuinely when it comes to trading, I would say about 99.99% of the time you're preparing or setting something up. The 0.01% is you actually clicking that button on your phone or on your computer, clicking confirm. Okay, so it's literally just a very, very, very big game of patience mixed with a little dash of aggression. Okay, so it really is just patience and preparation. So I think that's what gets with a lot of people's emotions, is that they think too deep with it. It really isn't as deep as you think. So whenever someone gives you that bland advice like be patient, they really are trying to say be patient. They aren't just giving you that because there isn't another answer. Because I know sometimes when you go to ask for advice, you'll get some bland answer like that, like just change your mindset, just reset. That's such bland information. What the hell do they mean by that? And that's what they mean is be patient, because most of this is preparation. So for me to get this trade, right? And no, I'm not going to sit here and say I was watching this for 6 months. But for someone who is, you had to have watched for multiple months to go by to have this support made. So a lot of patience was made behind the little bit of preparation it took to get this play. Okay, so go through your TA routine, go through your BB system. You even saw Chef preach it today, talking about his zone trading and any of the swings we do. It doesn't matter what swing we call out. The next day and for the days on end, you need to keep applying the BB system and TA routine so you can keep yourself in that trade. Okay, because you got yourself in the trade, keep yourself in the trade. Now, what did you plan out? You're not making the plan as you're entering the trade. You need to have all this thought out before. So, when we type out those trades, you see me type targets, you see me type stop losses, and I'm doing all that beforehand. I'm not doing it live, so I'm never sitting here going, oh, damn, what do I do with my position, So today I'm going to cover Chewy, X, and low. I'm going to just cover a couple points. But Chewy was not a swing trading pattern call out. It was just a new low break, and these are very common. The other day it broke below, pretty good volume too. No, it wasn't rising or anything on the daily, but that's okay. But so that we were willing to take the risk reward on that. The risk reward was it going down even lower and us making money to our other supports from our TA routine in which we marked. So we have levels and targets to go to, which we called out. And our risk is if price does not, and it holds here, we're cutting losses if it tries to retake these 76s, 78s, between here, because we know that is a very big area of support. So if they were to take price back above that, they're most likely going to take it back into this range to range trade. They're not going to parabolic fly or, die really quick, kind of like they did. But that was very basic swing trading call out. I would say this is probably the most basic they'll get, is you marking very common levels of support and resistance and then waiting for candles to close under, and that's another thing too. Don't fake yourself out by watching this, end of day. You need to be entering end of day, so you need to see where stock price is, but you just need to make sure where is it closing. I wanted to close under this range. It did, so I'm in it. I'm not worried about that. If anything, we could have called that out a little bit earlier and set our stop loss here. So that could have been even a bigger profitable trade. But let's go over X now. So that one was just kind of like TA routine, BB system, applying just basic price action that we cover in here. Now let's go over this one here, X. So on the daily, why this was, I'm going to start over too, so you don't think I'm making this up. So this right here, is anybody aware of what this candlestick pattern is? These two candles right here. Is anybody aware of what these two are called? I'll give it a couple of seconds and then I'll answer it myself. Okay, I see JBake typed it. DCC. This is a dark cloud cover. This is a bearish reversal candlestick pattern, and all the time you're gonna, you don't have to ever ask me what time frame I'm looking at. Most of the time, I'm looking at the daily time frame. And this is actually a very, very high probability pattern. It is almost as good as a star. It is not as good as an engulfing. So very, very strong bearish candlestick pattern. Volume, again, not looking or paying attention to that as much. It is important to have volume. I'm not saying it isn't. But when it comes to actually looking for the pattern, it's all about what pattern is it and placement. You guys have heard me say this a million times. So again, I'm not just looking for a bearish candlestick pattern. If I'm in a channel here and price is going up. Amazing drawing, I know. I'm not looking for bearish candlestick patterns here to go lower. I'm going to be looking for bearish candlestick patterns at these points where I know a common resistance is at. Same thing with here. And no, I'm not going to make anything up and get every single dip. You're not going to get a candlestick pattern every single dip. You're just not. It's not going to be very helpful either. So don't chase any patterns either and make anything up. But that's where you're going to be looking for that. Is you're going to be looking for your bearish engulfings, dark cloud covers, evening stars here. You're going to be looking for your morning stars, bullish engulfings, piercing lines right here. That's mainly the patterns you'll see. Haramis, and I'll go over these more across the week. These are all part of the course. So if you don't have the course, you need to go get your hands on one. Let's keep going. So this is a dark cloud cover. Let me go ahead and erase that. So the big thing again, and what is something I keep saying? I keep saying mark the TA routine, right? So I'm going to go through here and I'm going to mark that. I'm going to mark everything I have. We're going to mark that gap range there, 2 emerging candles over here. Let's mark this one, which actually lines up with multiple, so that's awesome. And I think that's all I need. We can maybe mark that as well because there's a slight gap range there. And that's all I really need. So now I need to mark my trend lines because like I just said, I don't want to just randomly buy into a pattern, right? So what kind of trend I got going here? I'm not really going to mess with that. Just kind of focus on the local price action. So about right here. We can go from high to high. So you can see I have a nice channel here. It doesn't have to be perfect. I'm just trying to get a good grip around what price is doing. So I can start looking for my support catches here, my weakness in price here. And when you're looking at chef stuff, you're going to be looking at supply right here, demand right here. Okay, so same thing, just different names. So now that we have our trend lines and our levels set, we have most of our plan already made, believe it or not. Kind of exclude that today even happened so far. Let's zoom in now. Oh, wait, one more thing, sorry. With a dark cloud cover, and you guys have probably seen me talk about this about 50 times in the past 2-3 weeks as I've been streaming more and more in the Discord. You've seen me talk about control points, the 50% spots of patterns. What is the 50% spot of this pattern? Well, it would be this emergent candle, this blue candle here that popped off. So I'm going to mark with my Fibonacci, and this is just a cheat. You guys have seen me do this a lot. I'm grabbing from the open to the close of that blue candle. Because I need to see what's the 50% spot of that candle. I need this to close under it. It doesn't have to be percent. It just has to be close. Okay, so let's mark that 50%. I marked it. Let's delete our fib. Okay, so does that all make sense to everyone so far with what I marked? Let's actually color that line special because it is a very special level. Mark it orange. So for that dark cloud cover to confirm, I needed to close under this. When I'd called it out, I think it was on the comeback up. It was on one of these few candles here. Or no, it was on the break. That's right. We were chilling in a private. Came back up, gave me a little retest here. So it was pretty close, but I'm not going to worry about a couple cent difference. But it perfectly held to the control point. So now I know our short swing is now verified. We are good to go. This is definitely a dark cloud cover. It has a very high probability of giving us a red day the next day. Okay, so next day opens. You need to already have your BB system marked. So I'm going to mark my pre-market low. I'm going to mark my pre-market high. I'm going to mark my previous day high, and I'm going to mark my previous day low. Okay, so now I have even extra targets, and it looks like a lot of levels, but you're going to appreciate this when you're actually in a trade and your emotions are actually on the line with your money. Okay, because it's going to be a lot of different ball game, me just talking about it and you paper trading something, but it is a very different ball game from when you are actually in the trade and your money is actually moving. You're going to be looking at your contracts a lot. Don't do that. Do not look at your contracts. This is all about the chart. I have not once said go look at your contract and see how much you're up. Okay, because within this, you're able to set stop losses, you're able to set targets, and you're able to set breakout levels. Okay, and there's a lot of cool rules to it. It's kind of like a self-revolving learning system. Okay, so the more you start marking these control points, the more you're going to start being able to get that eye of, okay, well, now I know buyers and sellers need to battle over this level. When you go to mark your trade plans, you're going to start being more aware of what you need to be marking. How many targets do I need? Do I need to have this target farther? So go through all that. Talk to yourself, really get crazy with it. And as you can see, next day, ended up opening red, dropped even lower, fell through our target. Right here on the 10-minute, it might seem like, well, that didn't do a whole lot. You wouldn't have made a whole lot. Well, in reality, these two candles here, you made over 30% in. Okay, so we're not looking for something to hold for 10 days. If you can actually hold these trades longer and scale out over time, that's cool. In the beginning, I want all of you to start just selling at the first few targets. Do not hold super long. Aim for those first few targets. Build yourself up. Do not just keep going into trades expecting to hold it all the way through. Do not be greedy. That one rule will save you so much money. Stop being greedy. Okay? It's a staircase method. Just think of it like that, okay? So right now you're aiming for those first few targets down here, right? In the future, you're going to start selling a few of your contracts here and holding to those farther targets based on how price action reacts to the levels you have set, the trade plan you have made before, the preparation, okay? So make sure to definitely go through, make your trade plans, make sure to go through the course, try and learn some of these patterns, make sure to catch these streams. I'm giving out tons of information that I probably shouldn't be doing. This is all from the course, and all of this will make you a lot of money. And it's not really about money. It really is about learning and growing. It really is about finding your apex as a trader, sharpening yourself as best as you can. So before I move on to lows, did all of that make sense? Is there anything anybody wants me to go back over real quick before I move on to the next part? I'm trying to cover every point as I can, so hopefully I'm doing that well enough. But if anybody needs me to hammer down something again, please let me know in chat anywhere. All good. All right. Let's just keep going. Let's look at lows then. So how did me and Chef know to keep holding lows? Let's go to the daily. So why was lows even called out? Me and Chef have both posted videos on this, and Nike was very similar. A lot of the plays we do are pretty similar, actually. They just end up playing out a little differently every time. So lows relates to stocks like Home Depot, Caterpillar, stocks like that. So if you go look at those stocks, you'll see they did the same exact setup. So I'm using correlation in my play now, kind of like how we talked before, saying you would trade, your BA with whatever index, you would trade NVIDIA with tech, you would trade Facebook with NASDAQ, you trade Apple with SPY and NASDAQ. It's the same thing. I'm finding correlation or something to compare with that stock. So with lows, I'm using the HD and CAT charts, right? Ended up breaking new all-time highs. I think we've been well aware of that on Home Depot. Same thing with Caterpillar. Been moving higher. Very nice. Very strong pattern there as well at the breakout. Now let's look at lows. So lows, trend change play. So we're getting our strong downtrend line. I think we've seen this posted about a gazillion times. We marked our gap range. We marked a couple emerging candles. Why do I have this light blue line though? So I'll get to that here in a second. But we have a bullish Harami here. The next day is red, but not canceling out this bullish Harami. Why is that? It held the pattern. The outside of the pattern is very, very important. Always mark that. That is where you see straight control. It is just as controlled as the 50% line of any pattern you'll see me cover. So anytime you see a candle close over or under that, that is a definite answer. Doesn't matter if it's 10 cents. It is a definite answer. If this would have closed under this line here at 196.07, this would have screwed lows and it would have gone lower. It would not have caught here and pushed up. Okay, so next week it pops up. We get a gap up, blue day, everyone's greening their trade. Why did we keep holding, though, after this red day? Why did me and Chef keep holding? Because on the daily time frame, after this breakout, candles closed. What did I get right here? I was being preemptive. Okay, so what was the candlestick pattern I just covered on United States Steel? I just covered a dark cloud cover. What was the rule behind that? Marking the 50%, right? Why am I marking that? This candle gapped up. It started above this. Okay, that's the rule of the dark cloud. You always have your first day. Oops. You have your first day. The next day has to gap up. It has to gap up and start higher. Then when it comes down and breaks the 50% of that first day, it is considered more bearish, correct? So what happens if that doesn't happen and ends up holding that level? It's a support catch. I'm still bullish on it, right? So it's the same exact thing as being preemptive, me thinking ahead, I guess you could say. But day gapped up above it, came back down. I marked the 50% of this day here at 199.50. Let's look at that on smaller time frames. Yesterday it came down, held 199.50. Yeah, it did go lower, so that was a little sketchy, but it kind of is why I kind of watch the bigger time frames. You really do have to watch, because as you could see, when I was watching times and sales, it slowed down here. You had a pickup in sellers, but relatively lower volume as we headed into lunchtime hours. So what happened after that? Support catch, a bunch of boring volume. We sit in here with a bunch of more boring volume. We finally get a pop. Where are we getting that little pop from, though? Why did we get a random interest of buyers there out of everything? It's because it's off that 199.50. That is algo related. Someone else is looking at this. There could be 10,000 other people looking at this. Whatever it is, though, it's very important to watch this support catch. That's why I held that. Ended up pushing overnight. As you can see, pattern trading playing in my favor. And again, when you're playing these, you have to kind of in the beginning. Again, let me cover that again. Please start selling in the beginning. Start selling to those first few targets. Over time, you will get to the stage where you can start doing things like this and start scaling out of contracts. You could have sold 2-3 contracts here, held 1 or 2 up to this point, sold them here. You could still technically be in this trade, considering our TA was saying Caterpillar and Home Depot are up here making new all-time highs, yet Lowe's is down here. So technically, you could still be trading this to the 206, 206.50, 208, 209, 210 levels. So that was all I was going to cover. I covered, how because you can set stop losses on this too, guys. So please go back through. If you ever see any of my callouts, go back through the chart yourself and see why did I put the stop loss there? Why did I put targets there? Let's see, where did I put the stop loss on at X? For X, the stop loss was 25.80. Let's see, 10-minute. Why did I mark that? That orange line. It's because that's the control point. I'm going to always have a level that makes sense, whether it's an outer line of the pattern, a control point 50% level of a pattern, it doesn't matter. Any of that, though, is what I'm going to be marking, because that is what's going to give you the best levels. These are very high probability levels. So this is really good for overnight swings, mostly, but as you can see, this can lead to holding things for longer than a day or two. So I hope this stream was helpful. I'm going to cut the recording here, but I appreciate everyone for coming in here and joining in on that. If you have any questions, though, feel free to ask right now. This is the time to do so.